See, your credit score controls more of your life than you realize. It determines whether you get approved for premium credit cards, what interest rates you pay on your mortgage, we're talking tens of thousands of pounds in savings, and whether landlords even consider you. But here's what nobody tells you: increasing your credit score dramatically isn't complicated. Most people just don't understand how the game works. I've helped over 5,100 people repair their credit, and I've seen people go from 580 scores to 900 plus in under 18 months. Today I'm going to show you exactly how to do it. If you're serious about fixing your credit, drop a like and subscribe, because this might be the most valuable credit advice you'll ever get. Here's what actually matters. Your credit score is calculated using 5 factors, but they're not weighted equally. Payment history plays 35% of the pie chart. Do you pay on time, miss one payment, and drop 60 points? Credit utilization is the next 30% of the chart. How much of your available credit are you using? Credit age is 15%. How long have you had credit? Credit mix is 10%. That's different types of credit like cards, loans, and mortgages. And finally, new credit plays the last 10% of the pie chart. How often do you apply for new credit? Payment history and utilization makes up 65% of your score. Master these two and you're already ahead of most people. Now, payment history is 35% of your score, yet people constantly mess it up because they don't understand how credit card payments work. Here's what confuses people. You see current balance, statement balance, minimum payment, and payment due date. Which one do you pay? Now, the golden rule that I say to everyone over and over again is always pay your statement balance in full by the payment due date, not the minimum payment. That's a trap. Not the current balance. That includes your next billing cycle. Real example would be your billing period runs from, let's say, January 1st all the way to January 31st. You spend £850. On January 31st, your statement closes showing £850, and your payment due date is February 24th. Pay that $850 by February 24th and you're done. If you only pay the minimum, maybe £40, the remaining $810 carries over and occurs interest at 20 to 30% depending on the card you have. That's how people end up in debt. Pay the full £850, zero interest, and perfect payment history. One missed payment stays on your report for 7 years. 7 years of damage from one mistake. Now, here's the good news. Most issuers don't report late payments to credit bureaus until 30 days late. So if you forget, you have a grace period to fix it. Set up automatic payments right now. Automate your statement balance payment for 3 days before the due date. Do this for car loans, mortgages. You have a set payment every month. Pay it on time every time. 100% payment history is a non-negotiable for a high credit score. Now, utilization is 30% of your score, and the factor most people completely misunderstand. Here's the beautiful part. You can manipulate this to increase your score almost immediately. Credit utilization is the percentage of available credit you're using. £5,000 limit, use £2,500. That's 50% utilization. Common advice is keeping it under 30%, and that's wrong. That's amateur thinking. If you want to dramatically increase your score, keep your utilization under 10%, ideally under 5%. I personally play it extremely safe because I take care of my credit and I keep mine between 1 to 4%. I've seen people's score jump from 40 to 60 points just by reducing utilization from 40% all the way down to 5%. No other changes, just utilization. Here's the key. Credit utilization has no memory in most scoring models. If your utilization is 45% this month and your score drops, but next month it's 3%, your score jumps right back up. The models don't penalize past high utilization, only current. This means you can strategically manage utilization to boost your score when needed. Now, here's the strategy behind it. Your statement balance gets reported to credit bureaus, not your current balance. Statement balance on closing date. Want low utilization reported? Pay down your balance before statement closing date. For example, I have a £10,000 limit. I spend £3,000 during the month. If that £3,000 reports as my statement balance, that's 30% utilization. Instead, I pay down £2,700 before the statement closes. Now my statement balance is now £300. That's 3% utilization. That's what gets reported. Then after the statement closes, I pay the remaining £300 by the due date. This lets me use my cards normally, but keep reporting my utilization incredibly low. And a cheeky way to keep your utilization low is by asking for credit limit increases. So every 6 months, request credit limit increases on all your cards. Not because you need more credit, because higher limits mean lower utilization. A £500 monthly spending on a £2,000 limit is 25% utilization. The same £500 on a £10,000 limit is 5% utilization. Most banks increase limits online without hard inquiries. Do this every 6 months and watch your utilization drop. Now your credit age, this is 15% of your score and you can't rush it, but you can optimize it. 2 components: oldest age account and average age account. Never close your oldest credit card, especially if it has no annual fee. That card is helping your score just by aging. My oldest card is 8 years old. I barely use it, but I keep it open. Average account age is also important, and every new account that you open brings this down. For example, I have 12 cards. My oldest card is 8 years, but my average age is 3.5 years. The strategy behind all of this is to start building credit as early as possible. If you're 18 or 22, make sure to open your first card now. That account will be incredibly valuable in 5 to 10 years. And a little cheeky hack that you can do is become an authorized user on someone else's old account. If your parents has a 15-year-old card with perfect history, ask them to add you to it. That entire 15-year history gets added onto your report, instantly boosting your average age. You don't even need the physical card. Now the next 10% of the chart is new credit. When you apply for credit, the lender does a hard inquiry. This drops your score by 3 to 5 points temporarily. Now the truth is, hard inquiries matter very little long term. Impact fades over 12 months and disappear after 2 years. Plus, the new card helps your score more than the inquiry hurts it. You get more payment history, lower utilization, and better credit mix. Now the strategy behind this is to space out applications 3 to 6 months apart. If you're getting a mortgage soon, stop applying 6 to 12 months before. And the final piece of the puzzle is credit mix. That's different types of credit cards, loans, or mortgages that you have. And my advice from this is don't take on debt just to improve your credit mix. That's insane. Live normally. If you ever need a car loan, get one. If you ever buy a house, you'll have a mortgage. These diversify your mix naturally. Focus on payment history and utilization and let credit mix happen naturally. Now that's the exact framework that you need, and now you see how it's possible to go from a 620 to a 900 score increase. Now what you don't want to do is make the mistakes that kill your progress. Here's some of them. Closing old cards. Keep your oldest card open if you don't use it. Only paying minimum payments. Always pay the statement balance in full. Ignoring credit reports. Check all 3 credit bureaus and dispute errors. Opening too many cards too quickly. Make sure to space out your applications 3 to 6 months apart. Not tracking utilization timing. Pay down before the statement closing date, not just the due date. Giving up after one setback. One late payment hurts, but isn't the end. Just make sure to build 12 months of perfect history straight after. Now, your credit score is a game with clear rules. Most people don't understand the rules or don't execute consistently. You now know the rules. The question is, will you execute? If this gave you a clear roadmap, drop a like and subscribe. I've helped over 5,100 people optimize credit and travel hack using strategic credit card use. Comment with your current score and goal score. Let me know which strategy you're implementing first. Check my credit card ladder video in the description to learn which cards to get at each credit level to maximize rewards while building credit. Your credit score isn't just a number, it's access to better opportunities, lower rates, and premium cards that let you travel the world for absolutely free. Now go fix your credit. You know exactly what to do.